a good team. What we want to make sure is that they all hear your story. They all, they all know what you're doing, and they know how you are being progressing throughout the program. So the idea is to do a KPI presentation, maybe a 5-minute kind of show and tell, and then follow with a cocktail and graduation. So that will be May 24th at 5 o'clock at noon. So make sure you're all taking note of that. Don, I don't know if you, well, I can do it later, but we can write it down on the chat as well, so everybody's on board. And one more thing, April 20th. April 20th, you all probably all received an email from Barb already, but we're going to have the first KNOWNpreneurs Social at noon. Will be April 20th. I believe it's at 3 o'clock. If not, I'll confirm. But there are 5 panelists already confirmed from cohorts 1 and 2. And we like to make sure that you all meet each other and know about your business. Okay, so that will be April 20th. So with that, I'd like to introduce Jennifer and Ellen. Jennifer is the manager of I-Squared, and Ellen is the librarian at I-Squared. And we've been working with them for a few months now, thanks to Julia, who connected us together. And we have a lot of exchanges in terms of material documentation, research between both organizations. We're very happy to work with them collaboratively. And today's topic is about grants. It's about searching for grants and what do you do to prepare for grants. So with that, I'll give you the floor, Jennifer.
All right, thank you. So as Juan said, my name is Jennifer. I am the manager of I-Squared at the New Haven Free Public Library. I've been a librarian for about 5 years in New Haven, and before that I worked at the Department of Sanitation in New York City doing records management. I have also worked at the New York Historical Society and the National Archives New York City branch. I am very excited today to be talking to you about grants and grant opportunities and showing you some of the free resources that we have at the library for you to actually search for your grants. And if Ellen wants to give her 30-second spiel, we can then get started.
Hi, I'm Ellen Jampol. I'm the business librarian at the New Haven Free Public Library. And my background includes being a corporate librarian in the Hartford area. And most recently, I was the business librarian at the Westport Library. I've come to the New Haven Public Library recently. And that's my bio.
All righty, and then share screen. All right, can everyone see a lovely purple PowerPoint? Yes, great. So I'm just going to minimize everyone so I can make sure that I can see the screen. If you have any questions, feel free to unmute yourself at any time or put them in the chat. We will get them and we will get going. So this is what we're going to cover in this session. What is a grant? What should a grant be? And then the process of looking for a grant, writing a grant, the parts of a grant proposal, the implementation of a grant or the grant life cycle, and how to close out a grant. And then I'm going to also show you one of the databases available at the library for grant searching.
And the first question is, what is a grant? And a grant is a set amount of money given to companies or individuals by foundations, government agencies, nonprofit organizations, or other businesses for a specific purpose. And these companies or individuals that want grants must meet specific requirements. The best part about a grant is there is no expectation of reimbursement. For-profit businesses are more likely to encounter difficulties finding grant funding than nonprofits, but it's not impossible.
So there are a couple of things that you need to do before you even start looking for a grant, because these things take time. You're going to need to register with a federal grant program. You're going to need your employer identification number, tax ID. You're going to need a DUNS number, and know that it takes up to 30 days to actually get a DUNS number, which is why I'm not recommending that you all go start looking for a grant today. You want to make sure you have a solid business plan. Your vision, mission, and values are set and solid. Everything should be focused around SMART goals. We're going to talk about SMART goals a lot. You're going to also want your profit and expenditure history, any sort of funding documentation, as well as staffing documentation, and financial projections, having all of this ready to go before you even start applying, because you're going to need these to actually write your grant.
So we're talking about prep work. First, you have to conduct research. What makes your business unique? How does your business project fix a community issue? Why will people buy from you over other organizations? And who supplies grants in your business area or locale? What are their goals and objectives as an organization? Then you have to look at the eligibility requirements. First of all, do you meet all of the requirements set forth by the grant you want to apply for? All is really important. Will you be able to complete the grant in the time required? Do you have the bandwidth to write the grant as well as the required follow-ups? And is there anything additional you must do before applying for this grant?
Why is it not moving forward? There we go. So these are like general guidelines when looking for your grant. If you don't meet all of the requirements, it's not worth your time applying. You will not get it. So you have to make sure that your company is well suited to the grant and the grant is well suited to your company. So you need to make sure that you're researching your grantor, the person who's giving you the money, making sure that your vision, mission, and values meet their organization's vision, mission, and values. You need to follow directions to the T. So read the directions, reread the directions, have somebody else read the directions. If it says they want your grant application in Times New Roman 12 font and you give it to them in Arial 12 font, you will not get your grant. If you can't follow these directions for applying for the grant, how are they going to expect you to follow the guidelines of the grant? Making sure that every time you're writing any sort of objectives, they're SMART. So I'm sure you all know it's specific, measurable, achievable, relevant, and time bound. It's great to have really lofty goals, but that is over a period of time. And you want to make sure that your grant that you're applying for actually will work in the time frame you have. And you also need to be very specific about how the money will be spent. So it's not just, oh, I want to hire people or I want to hire veterans. It's I want to hire 4 veterans for this amount of time. It has to be very specific because they're going to want to know.
And so when you're doing your grant proposal, review your business plan. These are some of the best practices. Include many of the same elements as your business plan includes. Again, the proposal should be tailored to each individual grant issuer and maker. Say you want to apply to 4 grants. Well, each grant will have different requirements, and you will have to tailor your proposal to the requirements of each grantor. So you must understand the needs and wants of each grant maker. Read and reread the requirements. Do no more and no less. Align your goals and objectives with the purpose of the funding. So these are your best practices.
So from here on, we're going to be covering the parts of a grant proposal. So the different things that you will usually need. Some grants don't require all of these pieces, but a lot of grants do. So we're going to be covering the parts of the grant proposal and then the life cycle of that grant. So every grant proposal usually requires a cover letter. Sometimes federal grants will not require a cover letter. So just be aware of that. The basics obviously should be your business name, the submission date. So that's the date you're actually submitting the grant. It's important to recognize that all of your dates should match. So give yourself a deadline of I'm going to apply for this grant on this date. and then have all of your dates match. And the contact information for the owner or director, so that would be you. Or if you have some sort of board of directors, it would be the person who's on the board of directors. The cover letter should be like a cover letter when you're applying for a job. It's brief and to the point, no more than 1 page. But the important thing is that you're showing how well you understand the funder's mission or their objectives. So you don't want to use the cover letter to say, this is everything that I want to do in my grant. It's, this is how my company will benefit you as a grantor. And the whole point of the cover letter is to make the funder feel connected to the applicant. They're going to receive hundreds of applications, and you want yours to stand out. You want to make sure that they feel connected to you and your mission, and that you are connected to them and their mission.
Now, the cover letter explains why your business is perfect for the grant and what you aim to accomplish with the money. It states the needs your business serves, how you address those needs, and how your mission fits with the grantor's goals. If you can, include a support statement from a member of the board or a community organizer and leader. And as Jennifer said, federal and state grant applications usually do not need a cover letter.
At this point, does anybody have any questions? I'm just going to take 2 seconds to stop and see. It does not look like it. Okay.
Dan, I just want to ask a general question just
Yes,
to
absolutely.
make sure level setting. The grants that you're focused on are state and federal grants, or would you say that this applies broadly across all grantors?
This should apply broadly across all grantors. Federal and state grant applications just have some different requirements sometimes. So we wanted to point that out.
Great.
So the next part of a grant proposal is pretty simple. It's a table of contents. This allows your proposal to be reader friendly. Basically, again, grantors will be looking at hundreds of applications. So they might just want to compare your one section of yours to one section of someone else's. And they can then very quickly and easily flip to the page or topic that they want to look at. It also allows grantors to easily review previous sections that they've read, so they're not just flipping through pages. It also helps the grantors fully understand your organization, its mission, and its needs, because in your table of contents, you want to be fairly detailed about what everything is, about what is included. Every section should have some sort of entry, just so that everyone is on the same page.
Okay, let's look at the overview. Again, we'll repeat something we've said before. You should meet all of the requirements as exactly as possible. You have to be very specific, and this shows that you understand the ask of the grant and will not bend the rules. They want to make sure you'll fulfill the goals of the grant. And you should write multiple drafts. Expand each point in outline form. Now, have another person read it to make sure you are staying on point and are meeting the requirements. They should also edit for spelling, grammar, typographical errors, etc.
The next section of a grant, so that's the overview of your general, like what goes into your grant. The cover letter and the table of contents goes at the very beginning, and now we're into the meat of your grant. So the executive summary. This includes the main reasons you are requesting a grant and how it solves the grantor's pain. So when we say pain, it's basically the thing that the societal thing that they're trying to solve. So the main reason that you're requesting the grant could be that you want to, I'll use the veterans example again, support veterans who are having trouble finding work, and it solves the grantor's pain because they're an organization who works on helping homeless veterans find housing. It should include your company's mission statement, which is why you should have that prepared ahead of time. Your executive summary should emphasize all of the key points in your proposal. Communicate the need for your business. So grantors are not just going to give you money because they like you. It needs to be because you have a need that they can solve. So you need to say why your business needs it and why you should get it over someone else who also needs it. It should include the cost of the project and the requested amount. You do not need to apply. If you say you need $100,000, you do not need to apply for $100,000 from every grant. You can apply for $25,000 for one grant and another $25,000 for another and $50,000 from a third. You're more likely to get something if you're applying for multiple grants. Just know that each grant does require a lot of bandwidth to make sure that you are meeting all of their goals and their timeline. It should include the time period that the grant will run through. So is this a 1-year grant? Is it going to take you 2 years? Is it going to take you 5 years? And the expected result. So that's basically your end goal. What if you get this money, this is what this money will do.
Okay, continuing with the parts of a grant proposal, you have a statement of need or a problem statement. Detail the needs and problems that your business is fulfilling and solving. What is the scope of the problem? What will you do that someone else hasn't or can't easily do in the future? Show that your company fills a void and that you need the grant to do so. Again, the proposal should be, and this section should be well written and reader friendly. Use quantitative data, statistical analysis, trends, expert views that support your argument. Reference reputable research, literature, and comparative data. Explain your time frame, including why securing funding is critical now. You really want to connect with the grantor.
And if you guys notice, you're going to be repeating the same things over and over and over again. Multiple people will be reading your grant proposal. Some grantors split it up over multiple people, but you are going to be repeating the same things. That's normal. So your project description is the main section of your grant proposal. Every single issue and idea should be in a separate section and detailed out as much as possible. But you want to focus on one idea at a time. So this makes it easier on the reader since your ideas are organized. I would very much suggest writing an outline before you even start writing this, or doing some sort of mind mapping, however works for you, of what your big idea is and then what your smaller ideas are, and then your details around that, so that when you go to write this section, it's a lot easier for you.
Now, the business objectives are also very important. These are the goals you aim to achieve with your business. They should be a highlight of your objectives. So you make them measurable aspirations of the project. The best way to do it in a bulleted list. Make them SMART, specific, measurable, achievable, relevant, time-bound. And it must be consistent with your statement of need. So you are repeating a lot of things, but you can see how this repetition builds your case.
So the methods and timelines, this section is specifically for how you are going to implement the grant. So I am going to put out a notice for jobs on Indeed, on Monster. I'm also going to be putting out flyers in homeless shelters and the VA, et cetera, et cetera. This is what we're going to be doing. And then in 1 month, we are going to do interviews to hire 3 or 4, whatever your number is, veterans to this position. From there, we are going to spend X amount of time training them in X, Y, and Z. And the whole goal of this is for them to have a stable job to encourage other veterans to help themselves with homelessness. I don't know, something like that. Visual timelines are good. So if you were to do some sort of infographic that has your start date, your end date, and have that visual timeline so that they can see time chunks, it's quite engaging, and it really allows the grantor to see the span of what's going on. That will also help them see how realistic your proposal is. If you're expecting something to take a week, or you're saying that something's going to take a week, and they know that it will actually take 2 months, you know, they'll be able to see that. This section, the importance of this section is really that it shows that you don't just have goals, because having goals is a great idea and it's useful, but if you don't have some sort of a well thought out plan, you're never going to reach those goals. So you want to make sure that your plan directly meets the goals and objectives and is a logical and timely way to get there.
Now, staffing, you might not think would be in a grant proposal, but most grants have stringent personnel requirements. One thing, let's say, that you can do, as we have used in the veterans example, is create employment with the money you're given in order to alleviate poverty and want. Make sure your personnel planning matches the grant requirements. Personnel planning must also be in line with your objectives. It can help to provide an overview of your business's leadership structure, who the founder is, the board of directors, the CEO, and you can include short bios of each of these members. What will each of these individuals bring to the table when you are implementing the grant?
Now, when we're talking about staffing, there's one other thing that you should know. For small business grants, there is often a requirement that the person applying for the grant has no more than X number of staff. Normally that is 50 to 100 staff members. So I don't think it'll be a major issue early on in the process, but that is also something that we should be looking at. The next section is your financial projections and budget. This is something that you guys are already working on. I know you have this down and I'm sure you're learning more. You really need to be realistic about the amount of money you request. If you're asking for $100,000, but it really is only going to take $50,000 to complete your project, they're not going to give you the money. So you need to be realistic. It will help to see how much that organization has provided in grant money before, so that you can be realistic with what they offer and how much they can realistically offer. And you should only include eligible expenses. So part of your grant application will say, this is what we give the money for. You should not ask for money for something that does not fit in to their eligibility requirements. You have to show that you have a firm understanding of managing finances and budgeting for your anticipated grant money. So they're going to want to see your budget. They're going to want to see financial projections, but they also may request your current financial status. Make sure all of your figures are 100% accurate. Again, check, double check, have somebody else check, have a third person check, have me check, have Juan check. Make sure that all of your figures match. If there is some sort of an error anywhere, it's going to tell the grantor that you are not prepared to manage this grant. You should specify direct costs. So that would be things like personnel, fringe benefits, equipment, supplies, things that are very tangible. Specify all of your current sources of incomes and contributions. So that would even include if you have volunteers, you should look at them at market value of the volunteer. You can also include indirect costs and overhead as well. Questions at this point? So I know this is a lot of information. And we will send these slides over so that you can have them as well.
Finally, you come to the conclusion of your grant proposal. It should be one paragraph. Reiterate your request and need in just one sentence. Explain how you will sustain the project when funding ends. Sustainability is a very important part of the grant proposal, and the grantor wants to make sure that if this is a good project, it will continue beyond the end of the grant. And then thank the foundation for the opportunity and include a final appeal for assistance.
So that is your grant. You've written your grant. Now what? First thing, edit and polish. Edit, edit, edit. You want to make sure that everything you are writing is clear and concise and matches what the grant is asking for. I would always suggest to read it out loud to yourself to hear how it flows. It might make sense in your head, but once you read it out loud, you'll realize that things are not written in a way that actually makes sense. Have somebody else read it. Make sure that they understand what you're asking for. Eliminate any sort of fancy or difficult words or jargon. Just because you understand what something means does not mean that somebody else will, especially if you have a niche or very different type of job that you're looking to fill. Correct all typographical, spelling, and grammar errors, obviously. Again, ensure your proposal is in line with your original summary and outline. Some people find it helpful to write a majority of their grant first and then do the summary, table of contents, and cover letter last. Because when you're writing your grant, you might find that things change. And so it doesn't force you to stick to what you had put in your cover letter. Instead, your cover letter matches your proposal. And one thing to note is grantors usually provide some sort of application package. That package is usually a document that lists exactly what they are looking for. It will also list the order that they want things in. So as we said earlier, not everything will always be required for every grant. Some may require more, some may require less, but these are what usually you will see.
And now we look at things to avoid. Basically, it's flowery language, editing and proofreading mistakes, misplaced priorities. You don't want to put in something such as save the world when they're really looking for you to help a community. Your accounting fails. You're not accurate. Jargon. They may not understand what the jargon means. Not paying attention to details. They really want to see what you are going to do step by step. Waiting till the last minute to submit. I once was doing a grant and I waited until the last minute to submit it. And of course, the website was down and it was creating all sorts of problems. And so you have to be on the lookout for things like that. So try to get your grant proposal in prior to the deadline. And then don't send any unnecessary attachments. If they've given you that application file and it lists what they want, just give them what they want. Don't add anything additional.
So you've written your grant, you've submitted your grant. From here on out is the management of that grant. So you submit your application and the grantor makes a decision. This could take a while. So it's not like you're going to submit an application and maybe a week later here. It might be a month, 2 months. It doesn't always happen super quick. A notice of acceptance, or an NOA, is sent to the chosen business or businesses. Sometimes there are more than one. And then a business accepts a grant is either they sign the NOA or use the funds. But once they do that, they are obligated, it is a contract, to carry out the full terms and conditions of the grant. If you don't, they will ask for the money back.
Now here's the post-award phase. Implement the grant. Do what you said you were going to do in the grant proposal. You will report progress to the grantor. Complete any closeout requirements. Let's say they want you to submit a report and want you to include every step that you've taken and how you've accounted for the money. These are all part of the closeout requirements. And the grantor should assist you and help make sure that you are complying with all the terms and conditions. So it's a two-way street. You're helping them and they will help you.
So this is the reporting process in your post-award phase. So you've received a grant, the grantor or a grant manager. So it's normal times you're applying to some sort of larger organization, they will assign you a grant manager. That is the person that you will be dealing directly with. You're not going to be dealing with the CEO of the organization. They're going to monitor your progress and your spending. This is important because they need to make sure that that you are not committing any sort of fraudulent actions or abusing the funds in any way. They want to have a very clear calculation of what you're spending the money on. You're spending it when you're supposed to be spending it. They don't want you to be committing fraud because then they also get in trouble. Then the business will submit reports. That's detailing conduct, but also how the grant money is being allocated. Some require quarterly reporting. My department works on a grant that requires quarterly reporting. Some of them will require monthly, some will require twice a year. That is between you and the organization. The grantor will then review your reports. They might also show up. So especially if you're getting a grant from someone local or fairly local, they might send somebody to your business to make sure that what you're putting in your reports is not just all talk. During this process, the business should establish a firm relationship and line of communication with the grant manager so that they can ask questions and prevent issues before submitting your reports. So anytime you have a question, you should be contacting the grant manager, because if you make a decision and it's not something that they support, that could cause trouble down the road. The businesses can also be audited by the Government Accounting Office and or the Office of the Inspector General. If you have a federal or state grant, this will usually happen if you have a federal or state grant.
Finally, in the closeout process, the business submits final reports. The final reports must be submitted within 90 days after the grant award expires or is terminated. Now, the grantor looks at these reports, confirms all required tasks have been completed. Until it certifies this, the business is still obligated to fulfill the terms of the grant. And now the closeout process can be lengthy, depending on whether or not there are concerns or questions. It helps to continue filling the terms of the grant past the termination date. And finally, you must keep all reports for a minimum of 3 years. You know how you have to keep your tax returns? Well, you also have to keep reports so people can go back and review them.
This is our contact information. We'll send this out in an email so you don't have to write it down. I'll send it to Juan. But that's my direct number to my office, Ellen's direct number to her office, and our direct emails. And that's the end of our PowerPoint. And since Juan told me I have about 5 minutes, you can still see my screen. It's blue and says Grant Watch. I am going to quickly go over Grant Watch, which is going to be your best bet for finding grants for small businesses. So there are
I don't know if it's just me, but the slide I see says contact us.
Okay, let's good to know. Meeting controls. I'm going to stop sharing and then start sharing again. Is it nice and blue now?
Yes.
Yes.
So there are a number of databases that you can use to look for grants. That includes the Foundation Directory Online, grants to individuals, etc., all of which are available at the library. But Grant Watch is going to be the one you're going to want to look for in terms of getting grants for small businesses. We do have an account at the library, so you can come in and we can give you a login to use this as a resource. So here we can do a keyword search. I'm going to search for a business. And I'm going to, and then just see what happens. From here, these are grants for small businesses. We can add filters. And these filters will help limit what you're searching for. So our grant interests are basically what need you're trying to solve. So we could do BIPOC, business, and we'll say disabilities. Geographic focus is Connecticut, and then apply filters. Now you can see we have 134 results. It is displaying ongoing grants. So these are grants that you can apply for. And it is not displaying archived grants. Archived grants are grants that have already closed. From here, you have to really look for what they're asking for. So like this is for a nonprofit, IHE or tribe, that's not going to really work for you, but this is a for-profit entity. This is expanding the healthcare workforce in rural settings, which doesn't really apply to us. One of the things that you will find is that many grants will require small businesses to partner with a nonprofit organization to do research of some sort. So you could partner with Albertus Magnus or with Southern or with Yale to do some sort of research for them. So for example, this application is to a USA Research Center or other entity to conduct research related to autism spectrum disorder. So you would need to have some sort of research plan with that organization and figure that out ahead of time, because it might take a while to get that taken care of. Let's see if there is.
So Jen, in line
Yep.
with that suggestion, if you wanted to be found by someone who's applying for a grant as a small business, where are you registering for that? So if I am Yale and I need to have a BIPOC business as my partner, where am I putting, as the BIPOC business, where would I put myself out there?
I would say I would contact Yale directly, the department that you would be looking to work with, and just say, hey, I'm available if this is something that you're interested in, especially if you want to work with someone local, which is what I would suggest to start. You'll find, you might find some that are just for small business and you don't need any sort of relationship. But that is, it really just depends on the grant.
Okay.
So it's regularly looking to see nonprofits for medical research. You will find that a lot of grants are asking for now is research for agriculture, medical, or technology, just so that you are aware. Tends to be what they're looking for. So this one might be a good one. It's a cooperative agreement to a private or public entity. And it's for required infant toddler court program to expand research-based infant toddler court teams to change child welfare practices. So if you have an organization that's working with children, that might be something that you can look at. I would, again, read everything very, very carefully. So awards will advance the following objectives. These are the objectives that you're going to be wanting to meet in your grant application. So increase the knowledge and use of policies and practices that support the unique developmental health and well-being needs of very young children and their families who are involved or are at risk for involvement in the child welfare system. That is one of the things that your organization might fit with. Just read these super closely and make sure that you can do everything that it is asking. It's going to give you a deadline date. This date is May 4th, a time. So this is Eastern Standard Time. This is their grant watch ID, how much funding they'll have. They're only doing one agreement. The size of the grant is $5 million. Now, do you have the bandwidth to actually manage this grant? That's going to be the question. Federal grants, I'm going to stop my share now, often require a lot of work. So you need to make sure you have the bandwidth to do the reporting, to manage all of that. Because if you don't, it's going to be a problem for you with the person who is actually giving you the grant. Grants under $500 or even a couple $1,000, unless they have no strings attached, are probably not worth your time, because the process is going to take longer to apply for it than the grant you're getting. So you really need to make sure whatever you're applying for really fits with what you're trying to do and is worth your time, as well as the time of the organization of whoever's going to be helping you manage the grant. But Juan told me 5 minutes, and I think I've gone over that 5 minutes. So I am going to stop talking and see if anybody has any questions.
Jen, if I may, just quickly, one of the things, because this might be overwhelming for some of the participants on the cohort. I mean, it's first shot at looking at the grant world and all the resources. So there's a lot to unpack here, right? Mm-hmm. Could you tell them what the library could do for them in terms of kind of hand-holding, the process of, helping them out and following up with them? Okay.
Absolutely. So you can sign up for a one-on-one appointment with Ellen. She will sit down and hold your hand through the entire process. Let me see if I can quickly get her Calendly link to put in the chat. So she can hold your hand through the process if you want someone to work directly with you. If you wanted to just come into the library and see what we have, you can also do that. I am happy to give you a tour. I am happy to sit down with you and show you any resources that we have. We obviously have books like Grant Writing for Dummies, but we also have more in-depth books that are not specifically for grant writing.
So what if someone wants to really outsource grant writing? Is that something that the library could do, or at least
We could put you
to-
in contact with some people who do grant writing as a career.
Okay.
Grant writing is definitely a process. But I would suggest that you look at writing it yourself first. I'm not saying you have to write it yourself, but make sure that you know everything that is going into it before you go to a grant writer, because they're going to be asking you for all that information anyway. So just
Okay.
make sure you do your research, but we can absolutely get you in touch with people who do grant writing.
Excellent. And can you leave us your information, Ellen's information, so everybody
Yeah, absolutely. Oh, I sent that directly to Juan instead of to everyone. Sorry. So this is the entrepreneurs page of the library website, all the way down at the bottom. It gives you a section that you can submit a request to us, and we will set up an appointment with you. That's my email. That's Ellen's email. And again, I'm going to forward all of the slides to Juan, and he can, and I'll send them to you as well, Dawn, so that you can forward them to the group, which also has our contact information as well as our phone numbers.
Wonderful. Well, thank you so much for.
Did anybody else have any other questions? I know it was a lot of information, but it is what it is.
Jen, I have a question.
Absolutely.
Good morning. I can't put my camera on. Really, I can't.
That's okay.
So, but in regards to grant for I would be interested in a not a grant, but more of a research project, an elderly in it, because what boggles my mind is the difference between how care is administered. I'm a home care agency, so that's what boggles my mind. And I see how the difference in care, and I would have loved to partner, and I have an idea about this, how to partner with some group to find to see, because I went on a vacation once, and I saw in that country how care was delivered compared to how care was delivered here, and see where people with means versus people without means, and how the care was no different in that particular country. And so it was something like that I would be interested in, and it should to see how we can improve in home care, to improve care everyone gets, and not because of means.
That sounds really interesting. As I'm actually going through some issues with my grandparents right now in terms of elderly care. So I think that is really timely. If you wanted to make an appointment with us, we can absolutely sit down with you and look at some of the options.
Absolutely. And I'm my company is Opal Stork Home Care. My number is 203-745-4080. If you need to talk to me about your grandparents, I have a 5-star rating.
Oh, thank you so much.
I just had to do that. I'm sorry, Juan. I have to plug.
You wouldn't be a small business owner if you didn't. So.
Yeah.
Did anybody else have any other questions? I know you have a 10 o'clock, so.
Yeah.
I will definitely contact you about the grant, the research, Jen.
Sure. It looks like that's it. Juan, did you have anything else that you needed from us?
Jen, Ellen, spectacular. Thank you so much.
I'm sorry we were talking at you for so long, but it's just there's a lot to unpack.
I know,
Yeah.
I know, but I think it was terrific. Thank you so much. And the fact that you guys can continue following up with the Knownnpreneurs, it's great. Thank you so much.
Absolutely. And one other shameless plug, there is a micro branch at Known. So we bring over 10 library books a month that you guys can use in the space. We're going to be bringing over this week a whole bunch of books on grants to help supplement this. So if you need anything else, there are books at Known.
Thank you.
Thank you.
All right. Have a good day, everyone.
Thank
Yes,
you.
bye-bye. Thank you.
Don, I think you mentioned there's a survey in the
Yes,
middle or not?
so
Yeah, okay.
while we wait for our next speakers to log on, at the end of each of these sessions, there is a survey. It's going to be a little bit complicated because we had more than one speaker this time. So we'll ask you to put in details where you can and reference the speakers where you can. And if there's free flowing space and you want to make a comment about a particular speaker or their presentation, please feel free to do that as well. So right now we are just waiting for our friends from the bank to log on. And I'm going to see if I can start, at least put up their presentation.
Don, while we're waiting, we're honored with the visit of Chris right here from EDUP.
Yes.
Chris graduated in cohort 2, and I want to give him a little bit of chance to give everybody an idea of what Chris is doing and what your business is about. He was featured in the New Haven Independent just yesterday, and so I like him to. I don't know. I think you start talking and then this camera follows you. I think that's how it works.
So my name is Kristen Threet. Name of my business is EDUP LLC. We're a food catering business, Italian-inspired soul food. We also a nonprofit organization, EDUP Foundation, and we just giving back in the community. We graduated from the Knownnpreneurs program. It was beautiful. We did a lot of networking. Congratulations to you guys for being selected into this program. It's a beautiful program. Make sure that you're networking and make sure that you go to 96 Howard Street and go get our Gorilla Lemonades. It's on 96 Howard Street, across the street from Pizza House. All right, pineapple, blueberry, strawberry, regular lemonade.
I got one here.
Yes.
Thanks, Chris. Appreciate it.
Thank you.
Yeah, Chris, the graduation ceremony, we're going to have Chris help us out with catering as well.
Yes.
And there's a social, Knownnpreneur social coming up April 20th.
April 20th?
Yeah, from 3 to 7.
Okay.
Oh, 4 to 7. I'm sorry, 4 to 7.
We're gonna have a more formal.
Yes. Yeah, it's going to be more formal.
But good to have it on your calendar.
Yeah. Yeah, this is the informal invitation.
Wonderful. So it looks like we are joined by Tony. Thank you, Tony, for joining.
Tony.
I want to ask Tony to introduce himself, and I will say, Tony, if you want an introduction from our Knownnpreneurs, they have 30 seconds to do it. So this is really taking your elevator pitch down because I want you to make sure that you get all the information that Tony has today. So if you could just give them your name, your business, and what your business does, 30 seconds. But Tony, why don't you go first so we can make sure we include your introduction. Tony, can you hear me? I'm not sure Tony can hear me, but I do see Glenn as well. Welcome, Mr. Davis. Thank you for joining us this morning.
Good morning, all.
Hi, Glenn.
Perfect.
How you doing?
I was asking Tony if you needed an introduction to the Knownnpreneurs and what their businesses are before you get started. And I was going to give them 30 seconds to do it. But I don't know how much content and how much time you need for your content.
Let me just jump in real quick. I just want to say a few things about Tony and Glenn for everybody. Well, first off, I met Glenn a few months ago, and Glenn runs a program within Liberty Bank for financial literacy. And And it's a very innovative program within the bank. One that it will really give you he's going to have a chance to talk about this, but he and I really hit it off really well, thinking about, the mission of Liberty Bank and the mission of KNOWNpreneurs. And he graciously accepted to come today to tell us about, how to introduce you to banks and all the tricks of the trade. And Tony Rossley is someone I've known for a long, long time, my days in banking, actually. And Tony is like, the key person in terms of, helping you make connections, networking throughout the, I guess, the socioeconomic fabric of small business. So you got two great people here showing you the ropes of how to get into banking, okay? So with that, I'll give you the floor.
So I do know that Tony was having some issues getting on the line, so we're working through those, Glenn, just so that you know. He's
Okay.
on, but he's having some technical issues.
Okay, so that's fine. I know I talked to Tony about 10 minutes ago, so I'm prepared to start. And then when when I'm ready to flip it over to him, hopefully he'll have all of his technology issues resolved. So, but good morning to everyone, and to Juan and to Latina. Thank you so much for inviting Liberty Bank to participate in this cohort about preparing your company to meet your banker, which is always kind of a frightening thought to know, okay, I've got to go in and talk to my bank and how to do that. And so hopefully through our presentation and through what Tony will have to share, basically we'll give you some tools and, comfort level in terms of what you should do to prepare your bank, prepare your company and yourself to meet with your banker, ultimately to secure the financing you need to grow and to advance your business. My name again is Glen Davis. I'm the first vice president, community development and CRA officer at Liberty Bank. And so that acronym CRA really stands for the Community Reinvestment Act. And that act itself is really federal and state legislation. It's about 45 years old. And essentially what it does is it mandates that all banks make their credit products and services available to all segments of their population, of their community, with specific emphasis on low and moderate income individuals and low and moderate income census tracts. So in other words, essentially what it says is that our loan products, while we, make those products available to the broader community, we have to be very intentional in terms of making sure that we engage individual business owners that are in low and moderate income tracts, engage them in a way that really is thoughtful, not reckless, but is thoughtful with the ultimate intention in, helping to mainstream all segments of our population. And so if you have any questions relative to that, I'll be prepared to answer that later on. But when we talk about Liberty Bank is really almost 200 years old, but it's really one of the oldest and largest customer-owned banks in the country. And so when I say customer-owned, that real name is called a mutual bank. And so Liberty is one of the oldest mutual banks in the country. And the difference between a mutual bank and, let's say, a Bank of America or a Key Bank, those are considered stock banks. We're a mutual bank. So we're owned by our customers, our depositors. If you are a bank customer, we're owned by you. Whereas, the Bank of America's, the Webster's, and some of the larger institutions, they're owned really by their stock banks. So they're owned by shareholders. And it makes a big difference in terms of how we raise our capital. We can't go to Wall Street and, pony up, a $20 billion or $20 million offer. We actually raise our capital by being prudent in terms of how we manage our assets and liabilities. So, having said that, we're more than $7 billion, we're about $7.4 billion asset company. One of the things that I'm really most proud of is when I talked about the CRA, and what it requires, every 3 years, the federal government and the state Department of Banking evaluates financial institutions on terms of their preparedness and in terms of their performance in their CRA responsibilities. And I'm proud that as of last year, 2021, Liberty Bank received an outstanding rating in both with the federal government, the FDIC, but also with the State Department of Banking. And so they've recognized that we did an outstanding job in making our lending products and services and investments available to all segments of the population, with specific emphasis on low and moderate income segments of our community. And so that's really, that's the highest rating. And so we're really proud to boast that. In addition to that, Forbes magazine represented that Liberty Bank was the best state bank in 2021. And then in 2020, Liberty Bank was named the top small business administration lender for veteran and minority-owned businesses. So the SBA in 2020 acknowledged and recognized by our performance that we were the top lender for minority-owned businesses and veteran-owned businesses. We have about 53 branch offices throughout Connecticut. Our service area, if you will, is pretty much all of New Haven County, all of Hartford County, portions of the Norwich, New London County, and then we go up to Willimantic area. So if you think about 91 North, from New Haven all the way up to Springfield, and even somewhat into Western Mass, but that's really what our service area. And then, last year we contributed about $1.5 million to, in partnerships from our foundation. And so that's really a general overview of Liberty Bank. One of the programs that Juan talked about was the Academy for Small Business program. And that's a program that I run out of our community development world. But the Academy for Small Business program is it's a 10-week training program. We take individuals, businesses through a training program for 10 classes. I say 10 weeks, I'm sorry, for 10 classes. And at the end of that program, based on some minimal qualifications, we extend a $5,000 line of credit to help that business owner launch your business. And so I recognize that the $5,000 may not be a lot of money, but in some instances, when you're looking at a small micro business, that $5,000 is really great seed capital to help launch your business. I've seen numerous instances where people need to buy some equipment. Let's say if it's landscape, someone who's a landscaper, they need to buy commercial lawn equipment, etc. I've seen where that $5,000 really was very helpful in launching the business. And so that program, we run at least 6 academies throughout the year. Because of the pandemic, they are virtual. So, essentially you can sign up from any place. The registration form is on our website. And as I said, there are minimal qualification guidelines. We have a very low credit score, about 6. You have to have a minimum TransUnion FICO score of 600 and some other qualification procedures. But that academy is run by, we have professionals from SCORE and from the Women's Business Development Center to help facilitate that. And so that academy is real good for entrepreneurs who are, fledgling, kind of small entrepreneurs, and then needing to go to the next level. That really provides a good opportunity. And as I said, we were the #1 SBA lender in 2020 to minority and veteran-owned businesses. And so what I'd like to do is now turn it over to Tony Rossley, who can really begin to talk about our small business programs in more in-depth relative to what we have. We have several small business programs, And I think we have I call it a 3-tier trifecta. And, you know, so I've only talked about the Academy for Small Business. Tony will talk about several other offerings and products that we have that might accommodate you. Before Tony comes on, are there any questions that I can answer prior to turning it over to Tony? All right, with that, I introduce you to Tony Rossley, our Vice President and Business Banking Officer.
Great. Thank you, Glenn. Can everyone hear me? Okay, great. My apologies for the delayed start. I was having some technical difficulties, but I'm glad to be here and glad to be presenting this morning on how to finance your business. So we'll advance to the next slide, Dawn. So the most common sources of funding for startup businesses typically would involve personal savings, working through banks, working with friends and family, individual investors, and more importantly, SBA guaranteed loans. As Glenn mentioned, it helps to work with an SBA preferred lender, and Liberty is that. So what that means, being a preferred lender, is that if the request is approved through the local bank, then, and if they are a preferred lender with SBA, then if it meets the criteria of the bank, then SBA will automatically provide their seal of approval and provide their guarantee. The process, you know, historically, people have been adverse to SBA, thinking it's a long, drawn-out process and very detailed. But for those banks that are preferred lenders, the process is much more simplified. Next slide, please. Okay, so here's a list of some alternatives to traditional bank financing. You know, ideally, we can get your business financed through the bank because typically that's going to be the best scenario for you in terms of rates and terms and you know, how the financing is structured. But this will just give you an idea of other alternatives like crowdfunding, venture capital, angel investors, peer-to-peer lending, barter. For those of you that may not be familiar with barter, it's basically trading products and services to get to where you need to be. Another important thing is vendor relationships. So if you're working with different vendors, it's always helpful to establish terms with them so that you have 30 days, for example, to pay without interest. And setting up those credit facilities with the vendors that you work with so that you're not using all your money right up front. Another thing is credit cards, merchant services, and merchant cash advance. Now, credit cards are critical to any business. If you're accepting payments, I would always encourage that you make it as easy as possible for your customers to pay you. And that would include being able to take MasterCard, Visa, American Express, Discover Card, and even debit cards. But one thing that I've seen over the years, and I have a history in merchant services, is if you're not accepting all the payment types, you could be losing out on business as a result. Some business owners are adverse to taking American Express payments because their interest rate, you know, their discount rate tends to be higher. But there again, it's proven that American Express customers tend to spend more in your business. So I would encourage all the card types. The last item mentioned is merchant cash advance. And this is really a last resort where companies can provide financing for you based on your future credit card acceptance. The rates are very high and we would really not encourage that, but it is something that's available. There's also home equity lines of credit or home equity loans. If you own your home, you can borrow against the equity to help supplement financing your business. There's always personal loans and lines of credit. There's cash secured loans and lines where essentially you would put up money in a savings account and the bank would then provide financing using that money as collateral. You know, it's quicker and easier if you have the cash to work with. And it is a way to establish business credit right from the very beginning. but not everyone's in that kind of a position to cash secure something. Another option is factoring or purchase order financing. So if you're providing a product and it's going to take some time to get paid on that sale, factoring would be a way of receiving funding up front, and basically you're selling off your accounts receivables to a third party. They will collect those receivables but provide you the funding up front. Purchase order financing is, again, if you have purchase orders that you need to be able to fund and produce product based on a purchase order, some companies can provide funding based on those purchase orders. And lastly, notice I put it at the bottom, grants, because they're far and few between, probably most difficult to acquire, but there are grant programs out there that you always want to explore. Next slide, please. The 5 C's of credit. This is important in any lending situation, and the banks will always look at the 5 C's of credit, which are specifically your character. Are you trustworthy? Do you have integrity and credibility? Capacity. Do you have the cash flow to service the debt? Capital would be your equity injection. And it's important to know that if you're seeking financing from a bank, for the bank to feel comfortable with your business and your business plan, it's helpful to know that you're equally invested and you're putting your own, what we call skin in the game. If you're believing in your business and you're able to put money into it, then it makes it that much easier for the bank to believe in that and also provide the financing. We also want to look at conditions. What's the state of the economy? What are the conditions within your specific industry? In 2022, are you going to open up a video store? It's probably not likely. You want to make sure that what you're doing, what you're providing is relevant in the current economy, and hopefully it's recession-proof and you can move forward. Looking at trends, your personal situation, can you manage this personally and for the business? It's a time commitment and a lot more to running a business. Last is collateral, and these are the assets used to guarantee or secure the loan. So assuming that the bank provides financing for you, typically in a small business scenario, the bank will place a lien on business assets. It's called filing a UCC, or Uniform Commercial Code. So in the same way that you may have filed your business with the Secretary of State, registering to do business in the state of Connecticut, if the bank is providing financing to your business, we will place a lien on the business assets, and that's basically a UCC-1 filing. So that would cover the assets to secure the loan that's being provided. Next slide, please. Most important is really being prepared, knowing what to ask for and knowing what the bank will require. In the case of a startup business or newly established business, it's always very helpful to have a solid business plan. And I always use the analogy of people that plan their vacation, and they'll spend countless hours doing searches online, looking for the best hotels and airfare and restaurants that they want to frequent. And then they'll spend a lot of time planning their vacation. But when it comes to their business, if they're not doing the same type of work and the pre-planning, it's just not going to work. The business plan is the roadmap for the success of your business. And it's going to look into who's your competition, how are you going to market the business, what's the proper legal structure, all these things that need to be considered. And a solid business plan is going to help the bank to really understand your business and feel more comfortable in a lending situation. Also, most important is the financial projections. So because we work a lot with SBA, when we're doing an SBA guaranteed loan, they will also require projections, financial projections of profit and loss for the first 2 years. And we usually like to see this on a month-by-month basis so that we fully understand the ramp-up period and at what point in time you're going to reach break even. and know that you have the cash flow to support repayment of the loan. So the business plan is really the most important. We will also ask for personal tax returns. Typically, the bank would ask for 3 years of tax returns, business and personal. If it's a newer business, then they're going to have more reliance on the personal tax returns, and also looking at your background in business. Have you worked in this particular space before? Do you have the expertise? And if you don't, it's helpful to draw from past experiences and look at transferable skills and kind of build that into your business plan and your resume. Resume and financial statements, we look at both a personal financial statement, which is essentially a personal balance sheet, which would list your personal assets and liabilities and your stated net worth, and also the pro forma, which is going to be your projections on how the business looks going forward. We also take a lot of interest in your resume and references. Having a strong background is critical to any lending decision. Personal capital investment, again, your skin in the game. What are you putting into the business in terms of equity? And that makes the bank feel more comfortable knowing that you're fully invested in the business. And knowing what to ask for and how much. So typically there's really two types of products that you can request. One would be a term loan, the other would be a line of credit. So a term loan would usually be for fixed assets. You're acquiring furniture, fixtures, equipment, what we affectionately refer to as FF&E. So these are tangible assets that you're acquiring for your business. It could also be funding for leasehold improvements. You've just signed you're soon to sign a lease, and you're going to need to do some renovation to your space if you're a retail location or restaurant, or even out of an office. But if you have leasehold improvements, that too can be part of a term loan. And when we're working with SBA, they like to see things broken down in categories. So it's always helpful to have a budget, your total project budget, which would break things down by leasehold improvements, FF&E, your furniture, fixtures, and equipment, inventory, if you need to purchase an initial inventory to launch the business, and lastly, working capital, which can be part of a term loan, and it would be considered permanent working capital, which just gives you the liquidity going forward and carry you through that ramp-up period. So that's a term loan. Lines of credit, on the other hand, would be for short-term borrowing needs. So I like to think of a line of credit as almost like a credit card without the plastic. So it's a revolving line of credit, and anything that goes onto a line of credit should be with the understanding that you can realistically pay that back within 1 year. So for short-term financing, lines of credit would be used for general working capital, financing inventory, seasonal cash flow, if there's seasonality to your business, financing accounts receivables. You've provided a product or a service, now you're waiting to get paid, but you still have your overhead to cover, and the line of credit can be useful in that scenario. So next slide, please. So types of financing, there's equity financing, which would involve friends, relatives, employees, venture capital, and angel investors. The caution that I would mention is that if you're using equity financing, you're usually giving up a portion of your business, some of the ownership in your business. Ideally, you can retain all of it. Those of us that have watched Shark Tank, it's always about the equity, and they're wanting to get a return on their investment. So ideally, you could work with a bank that can provide the debt financing. Next slide. Which is usually obtained through banks or credit unions, commercial finance companies, leasing companies. Just a word about leasing. There's essentially two types of leasing if you need to acquire equipment for your business. One would be a capital lease, and one would be an operating lease. A capital lease is essentially where you're making monthly payments, and at the end of the lease term, you have a buyout option. And usually it's $1 buyout, and then you own that equipment once you've completed all the payments. An operating lease, on the other hand, would be more like a rental. So you're paying for the use of that equipment, and maybe it's equipment that's going to become obsolete in a short period of time. So it doesn't make sense to own it at the end of the lease term. So an operating lease may be more suitable for you. There's also private funding companies. We talked about SBA and the benefit of that. One of the other things about SBA I'll mention is when we're doing term loans, the SBA can provide longer terms on loans, usually up to 10 years for furniture, fixtures, equipment in a startup scenario. So by spreading the amortization out over a longer period, it makes for a lower monthly payment. The nice part about SBA as well is that there are no prepayment penalties. And then for certain loan sizes, right now the SBA is waiving their guarantee fees, which are normally part of SBA financing. There's also certified development companies, companies like Community Investment Corporation, located in Hamden. They have a micro loan program. There's BDC New England. A lot of different organizations out there, HEDCO, CEDF, DECD, and there's a multitude of funding sources outside of the banks. Then there's also, we talked about factoring and purchase ordering and grants. Next slide, please. So when we're figuring out what products do we need, we talked about loans, and this would usually be for acquiring assets or leasehold improvements or initial inventories, and these are payments that are going to be spread out beyond 1 year. The lines of credit would typically be less than a year. I will mention that Liberty Bank has a unique product. It's called our Express Line of Credit, where we can provide funding to a business that's established a minimum of 1 year. And with this program, we base it off of stated gross revenue. So whatever your stated gross revenue is, you'd have to be doing at least $40,000 annually to qualify for this program, because the minimum loan size is $10,000. But we usually offer up to 25% of the business's stated gross as a line of credit product. And that's rounded down to the nearest $5,000. So if you're doing $100,000 in revenues, it's a $25,000 line of credit, and this would be available for ongoing use. And the nice part is that we don't charge an annual renewal fee to keep the line of credit active. And also, most lines of credit, or a lot of lines of credit, do require what's referred to as a cleanup, or a 30-day pay down, where the bank would want you to pay that line of credit down to zero and keep it at zero for at least 30 days to demonstrate to the bank that you're using it appropriately. You would never want to purchase a vehicle and put that on a line of credit, because that should be a term loan. So as long as you're using the line of credit appropriately, you should be able to do that 30-day cleanup and pay it down to zero. But with our Express Line of Credit, we do not require that pay down or that 30-day cleanup. So it just gives our borrowers more flexibility. We talked about leasing. Another important product is looking at overdraft protection and making certain that you're not bouncing checks to when you're paying vendors. You want to be cognizant of your funds availability with the bank that you're working with. How quickly do they clear checks? Are they clearing for next day availability, which helps your cash flow, or are they putting 2, 3, 4, 5 day holds on those funds before they're made available to you? So that's important to understand the funds availability and making sure that you're protected with overdraft protection. We talked about HELOC, home equity line of credit, the merchant services. If you're taking credit card payments, it's also important to not be fooled by just the interest rate. There's a lot of things that go into pricing when you're accepting credit card payments, and it's important to look not just at the percentage rate, but looking at the total fees that you're paying and taking that total amount, dividing into your total sales to figure out what your effective rate is. And I say this only because in addition to the discount fee the rate that you're paying to accept credit cards, there may be additional fees, things like the direct interchange. There's dues, there's assessments, there could be a per transaction fee in addition to the interest rate. So it's important to look at all aspects of your credit card processing to see what your true effective rate is and use that as a basis for comparison. There's also letters of credit. That's a bank issued document which provides a payment undertaking to a beneficiary against complying documents. If you're importing goods, if you're working with local municipalities, you're doing some building or things like that, you may need a letter of credit. There's also foreign exchange. If you're doing business overseas, importing or exporting, you'd want to explore what options are available for foreign exchange. There's also, in how you move money, wire transfers and ACH. The distinction between the two, ACH is short for Automated Clearinghouse. It's the same way that checks are cleared electronically and credit card payments go through electronically. So anything that's done via ACH is typically handled within 24 to 48 hours. Wire transfers, on the other hand, are immediate payments bank to bank. So if you're initiating a wire transfer, funds are transferred in the same day, and there's usually a higher fee associated with that. But important to know the distinction between the two. Another important thing to consider is online banking. And with online banking, this is a great tool to keep tabs on your banking, on your accounts, to see where you are balance-wise, be able to make payments electronically through electronic bill pay, and just keeping tabs on your business. The online banking is a really great tool. We talked about funds availability before, just knowing what the bank's policy is for funds availability. And when we talk about credit card, understand that there's also things like gift cards, loyalty cards that you can offer to your customers within your business to keep them coming back. Last is cash management. So, you have your basic checking accounts, and in addition to that, there could be cash management services that could be beneficial to your business. Things that would be included in cash management would be remote check deposit, so being able to send checks electronically to the bank, eliminating visits to the bank. So you can make deposits remotely. There's lockbox if you're dealing with customers that send in regular payments. We can accept those payments. No different than your utility bill where it goes to a PO box. That's typically a PO box at the bank where we handle those payments for you and post to your accounts. And then there's also things like fraud preventive measures, positive pay. If you're dealing with a lot of outside vendors, we can set up fraud preventive measures for check writing and for ACH. There's a huge increase in fraud right now, especially since the pandemic, where these criminals are taking advantage of business owners and they're accessing accounts. And so by using positive pay, this essentially would allow you to send a file to the bank with a list of all the checks that you've written for that day, the dollar amounts, the payees, and as these checks come in for presentment, the bank will match that to the file that you've generated. And if anything comes in that's not part of that list, we'll automatically reject that or call you to say, would you like us to pay this item? Because it wasn't part of your list. So it's a great way to stop fraud from happening in the beginning. Next slide, please.
Trying to move it. Doesn't want to move.
Okay. All right.
There you go.
All right. Thanks, Don.
Mhm.
So the next things that you should know about loans and lines of credit is it secured or unsecured? When we talk about secured, that's basically where we're looking at collateral you know, we want to make sure that we have security to cover that loan. And we talked about the UCC filing. We talked about cash secured. If you're not in a position to qualify for bank financing, then sometimes cash secured is a way to establish business credit right from the beginning. Another important thing is personal guarantees. Many of you may have already formed an LLC to protect yourself from personal liability. It's important to know that if you're seeking financing from a bank, even though you've got that legal entity that you've created, the LLC or sub-S corporation, whatever entity you've chosen, the bank will also require a personal guarantee. That basically means that if the business itself cannot repay the loan, they will look to you as the individual to recoup those funds. We always go to the business first, and only as a last resort, we would enforce a personal guarantee. We also look at accounts receivables concentration. Essentially, this is putting all your eggs in one basket. If you're dealing with different customers, but the bulk of your revenue come from a concentration of one or two customers, that could be a concern to the bank, because if you ever lose that customer, there goes the lion's share of your revenues. So it's always good to diversify your business and have multiple sources of revenues or different areas that you can generate revenue streams. We talked earlier about annual cleanups with lines of credit. Liberty Bank does not require that on any of our loans or any of our lines of credit up to $1 million. Important to know about annual renewal fees. And you know, be sure to ask up front about fees. You know, whether it's a checking account, are there minimum balances that are required to avoid service fees? Does it cover a certain number of transactions each month, or is it unlimited? You know, there's a big difference between the banks in terms of what they offer. We try to keep it simple, and you know, we do have a small business account that doesn't require a minimum balance, has no monthly service fee, and covers unlimited transactions. So the other thing is understanding about origination, guarantee, and application fees. Some banks will charge an application fee up front just to take the application, and whether you're approved or not, you're still having to pay that application fee. Origination fees typically would be a percentage of the loan amount, or it could be a flat fee. It could be $200, $250, $500. It varies from bank to bank. So important to understand what origination fees are being charged. If there's SBA involved, are there guarantee fees? And you know, obviously the application fees. With any of the lending that we do at Liberty Bank up to $1 million, we do not charge origination fees, but we do have what's called a loan processing fee, which is $275, and that's payable only if you are credit approved and you have accepted our commitment letter. We've committed to providing the financing, and once you agree to that, then the $275 is due. Also, you want to look at prepayment penalties. If you decide to pay your loan off sooner, are there any additional fees that you might have to pay as a result of prepaying? Also, you want to be aware of covenants. It's not as typical in small business lending, but covenants are basically the rules of the loan, where there might be certain requirements, maintaining your operating account with the bank that's providing the lending so they can monitor your activity. Looking at the relationship as a whole, sometimes pricing can vary based on the relationship. And most banks, I would say, are not keen on just doing standalone financing without the benefit of the deposit relationship as well. And if you think of, you know, a bank like ours that's a community bank, the more in deposits we gather, the more we can lend out to the local community. And everything does stay local. So relationship is important, and developing a relationship with a banker can actually go beyond the banking, because there's usually tremendous resources that your banker can provide. in terms of helping to grow your business. You also want to look at, is the rate fixed or variable? Important to note is that if you're using a line of credit, that's usually a variable rate. So it can adjust according to the Wall Street Journal Prime. So lines of credit are usually prime plus a certain percentage. And so that can vary on a line of credit. Term loans tend to be fixed for the entire term. And then also understanding how long the term can go. For furniture, fixtures, equipment, leasehold improvements, it's generally 5 to 7 years. Sometimes with SBA, we can go up to 10. And then if it's involving real estate, then that can go up to 25 years, 20 to 25 years. Next slide, please. We talked earlier about covenants. These are the rules that the bank will require. And it's primarily to maintain loan quality, keep adequate cash flow. And if you think about it, the cash flow, that's the lifeblood of your business. It's what's going to keep you going. It also allows the bank to preserve equity in the borrower if there's a weakness in the structure of the loan. And just keep in mind too that the bank may require updated financial information. So each year they may ask you for updated financials just to see that you're tracking according to your plan and showing adequate cash flow to service the debt. And next slide. Some typical covenants. As a solo business owner, the bank may require life insurance, and then the bank would be listed as beneficiary in the unfortunate event of your demise. At the end of the day, they want to know that the loan is going to get paid back. We also would require hazard insurance or content insurance. So if you're purchasing equipment, we'd like to know that you have that equipment insured from loss, and the bank would be listed as a loss payee on your insurance certificate. We want to make sure that your taxes are paid when they're due. Any fees, licenses, you're staying up to date on your annual filings with the Secretary of State, and that would allow us to see that you're in good standing with the Secretary of State. And annual personal financial statement. We want to see that there's been no management changes in the business. Anything that can, any material change within your business, no mergers or acquisitions, no additional loans without prior approval from your existing bank. And then there's also different ratios that the bank may look at. But again, not so much on the small business side, but as you grow, it's good to know about these things. And next slide talks about the rate basics. So a lot of what we do in small business is based off of the Wall Street Journal prime lending rate, which currently is 3.25%. Now the Fed is talking about the possibility of increasing rates as early as the end of this month. If the rates do go up or down, it's usually in small increments. So they are considering a 25 basis point or 0.25% increase, possibly by the end of this month. But the Wall Street Journal Prime is used for most small business lending, and there's usually a spread anywhere from 2 to 4% that's added to that index rate. So currently, any loans that we offer through Liberty Bank, they're priced at between 5.25% to 7.25%. So definitely a lot lower cost than using credit cards, it is a variable rate, so it would adjust only if the Wall Street Journal Prime goes up or goes down. And next slide. A term to know is EBITDA. So earnings before interest, taxes, depreciation, and amortization. It refers to a company's earnings before the deduction of interest, tax, and amortization expenses. It's a financial indicator used widely as a measure of efficiency and profitability. And a common misconception is that EBITDA represents cash earnings, but EBITDA is a good metric to evaluate profitability, but it's not cash flow. And keeping in mind that there are certain expense items when you do your taxes at year end that may not affect your cash flow. You know, if you have depreciation expense, you know, that's not a cash item, but it's reflected on the financials. So certain items we can add back to determine your cash flow. And that wraps up. I will open it up to questions.
Looks like you have a question from Sandra, Tony.
Okay.
Mr. Rossley, good morning. The truth is I have an aversion to banks, and I'll tell you why.
Okay.
When I started my small business in 2016, I had a certain I have a cash business, and in that cash, I have a home care business, and it's a cash business, so I depend on continuous clients. I had 25 clients. I walked into the bank that had my account, and I said I had 35,000. I needed 27,000 because I needed to buy a van.
Okay.
And my issue was I had a large overhead. So as you said, they use your LLC. Even though you have an LLC, they will look at your finances, your personal finances.
Yep.
My personal finances, my mortgage wasn't bad, but my daughter went to New York Medical, and I had a large loan from New York Medical for her college education. They did not give me, based on that loan, it was over 100 and so. Even though I showed that we're paying that loan, but it was more closer to 200 and something. They said my ratio was a 624. I forgot what they called it, but they said it was a 624. I'm sorry, 624, 624 rate. I forgot what. Yeah, so they wouldn't give it to me that.
So go ahead, Tony.
Sandra, would that have been the FICO score?
Yeah, it was the FICO score, but he said it's your it was
Or debt to
your
income
debt ratio. Your debt ratio.
Okay.
It was your debt.
Okay.
My debt ratio was 624, and they would not give me the 27,000. I said I have 25 clients. I had proved that before I even became a business, I had 3 of the clients were with me. I can predict when my clients are dying. So I think, I showed all of that. They wouldn't give me the money. I actually was so upset. I had an appointment that day with my cardiologist. I went to my cardiologist and I was so upset. And I was so upset because I said, I'm banking at this bank. They didn't give me the 27,000. All I wanted to buy a van. My cardiologist asked me how much rate, when they did agree to give me after I had to go through Gabriel Tower, because I had to go all the way up the rung because I keep fighting it. They decided to give me the loan at 9%. They decided to give me the loan at 9%. I went to my cardiologist. I was complaining about the whole thing while I was doing my echo, and he decided to loan me the money because I just to let me shut up about the thing. He decided to loan me the money, and he loaned me the money at 6%, and he said, pay me back when you can. I was able to pay him back in 1 year and 2 months. And I got my van. And ever since, he always said to me, if you have any, he says, I know you don't get any anything from borrowing from me, but your interest rate now is 3.9. If you ever need anything, come again, which I have never, but I was just so upset. He says that's the most interest he had made all year on his money, so he was happy I paid him 6%.
Yeah. Well, Sandra, I'm sorry you had that experience. And I can only speak from my experience. It's not across the board with all banks. I think it really depends on the bank that you're working with. Our focus is how do we get the financing done? Not how do we decline this request? And a result of that and that thinking, Glenn, I don't know if you mentioned our small business program, but I'll mention that Liberty Bank just recently put together a program to really focus on businesses that have been struggling, that may be in a low to moderate income neighborhood within the bank's service area. And we've reduced some of the requirements to make it that much easier to get capital into the hands of these business owners. So we call it our small business loan program. And just as an example, our standard underwriting, we do look at things like debt to income ratio, right? Because we don't want to see that you have like too much debt that you're not going to be able to pay us back. And a standard debt to income ratio might be around 45%. And then we also look at FICO scores, personal credit scores, business scores, and a personal FICO score that we normally look for would be 680. For this particular program, where we're trying to address the needs of the Black and brown business community, the FICO score requirement is only 625. So we're trying to make it more accessible to small businesses. So it really depends on who you're dealing with. And I hate to see the entire industry be bashed because of a bad experience, but I totally understand what you've been through. And, thank God you have a great cardiologist that doesn't want you to have a heart attack.
So Tony, with that 625, what would the interest rate possibly be? I know you can't say that because you're not looking at all the numbers of that.
I can tell you with confidence that the maximum would be prime plus 4. So, the way we handle the pricing is it's prime plus 2 to prime plus 4 based on credit. So as long as you meet the grade, even if your credit is less than perfect, the worst case scenario is going to be 7.25%.
Okay.
Which is the maximum we would charge.
Okay.
We're not a predatory lender, and we want to make sure that we can help these businesses to succeed. The other thing we do, I don't know if Glenn mentioned earlier, but we also offer complimentary credit counseling, credit repair. We provide resources to get everybody bankable. That's our ultimate goal. So I hope that answers the question.
Yes, it does. And I bank with Liberty Bank. I've been a member for about 20 years now, since I moved to Connecticut. And so I love Liberty Bank. Absolutely do. So
Kim, thank you so much for being a loyal customer. And if I can add to what Tony was saying, in addition to, it's really important to have a good relationship with your banker. And Sandra, sorry that you had such a bad experience, but one of the things that we also try and do, we try and do everything we can to make the deal work. And as I said, we have, I think, a 3 or 4 tiered program or process to really cover any type of business situation. But in addition to that, we have connections within the community that we can make referrals to and really make the transition smooth. So we're providing a handoff either to a group called CEDF or HEDCO or CIC. Tony referenced those earlier. And they become important partnerships in the kind of the global business transaction. Because while you need us for the deposit side of your business, in some instances where the loan cannot happen and cannot work at this time, we use those nonprofit, non-bank lenders to help facilitate that process, so that it still provides a very comprehensive approach to ensuring that you grow your business. And again, when you really look at your transaction, Tony mentioned our small business loan program. That's a product that sounds like would have automatically qualified for. And the beauty about, you know, the programs that we've talked about that Tony referenced, that we have a very short and efficient application process. Now, when you get over $1 million, you get into some real, sophisticated transactions. It's a more complicated application, but essentially anything up to $250,000 is a 1 or 2 page application, and your decisioning is probably within 24, 48 hours.
Exactly.
Ibra, it looks like you get the last question of the session.
Okay, so my question is, I've never gotten a business loan. I had my business since 2016 until recently. And when I applied, because as I think it was Sandra said, I've been a little bank shy because of all the bad experiences I've had throughout the years. But anyway, long story short, when I was putting my package together and banks were reviewing it, ultimately I ended up getting money from Headco. But one of the things they said to me, which I thought was really strange, but is this a normal question? In addition to my businesses, I work a few places. And so I have pretty significant income. And so the loan officer said to me, like, well, why aren't you just funding yourself? Like, why aren't you just using your own funds? And I just thought that was like the worst question in the world to ask. But is that like normal?
Well,
it helps to use other people's money, and rely on the bank to do that. Why deplete all of your cash? If you qualify for bank financing and it just makes sense, then why deplete your own cash? There's always good debt and there's bad debt, right? You want to make sure that the debt that you're taking on is really going to help to grow your business, increase revenues, increase profitability. I'd be thrilled that you have the extra.
Yeah. Oh, I'm sorry. I just wanted like a line of credit because I had just gotten a contract, and so I needed gap money to pay until the contract paid, and so pay staff until the contract paid. And so I just thought it was strange, like that they would say that to me. And I think that that's kind of what a lot of small business owners of color run into, like these weird things that instead of just having a conversation with us about how they can fund us, they're like, well, you don't got nobody you can ask. Like, what? No, I'm coming to a bank. I'm being a professional, and you should be as well. So, that was just a concern for me.
Yeah, no, that does sound like a crazy request. Why it was asked, who knows? And I do. So Tony, I can speak to this one because I do know that with African Americans, with Black and brown borrowers, there's a different level of, I acknowledge there's a different level of scrutiny that happens. I see it internally, I can comfortably say, however, that's the dynamic. That's not a Liberty issue. That's not a Connecticut issue. You can go anywhere from Maine to Washington state to North Dakota down to Florida, and we'll still encounter that same level of scrutiny. Is it unfair? Absolutely. I'm with you. But I will say, I think when you find relationships, one of the things that when you find relationships and you begin to cultivate that relationship, it helps to smooth the transition. So for example, and I'm just using this as an example because I know you'll have other lenders coming. Crystal, and I'm just picking on people, so don't take offended, Crystal or Kim, it may be helpful to having a conversation with Tony, to meet Tony, to talk with him, and you don't have a need right now. But to cultivate the relationship so that he gets to understand you and to know you and to understand your business. And at that point, then when you have a particular need, then it's easier, you've already greased the skids, if you will. Now, should you have to go through that? No, I got it. I'm with you. But you really have to take the environment that you're dealing with and work it to your advantage. And I think that is a very legitimate way, because at the end of the day, you really want Tony, you don't want Tony to approve the loan. You want Tony to be your advocate. And you want him to advocate for you when on the inside with underwriters and with the small business team. That's really where you want his voice. And he can't do that if he doesn't know you.
Well, I want to unfortunately call time on today's session. I think the team could think of a million more questions to ask. I could throw some out there as well, but I think what you've said here is, you know, relationship building is very key to this. So Tony, I'm sure your inbox is going to explode with at least 12 or 11 new friends. But Glenn and Tony, thank you so much for your time. And I'm going to turn this over to Juan. Again, I will ask the team to please detail your comments in the evaluation as much as possible. Thank you. Juan?
Thank you. Very, very well said, Dawn. This has been a great Q&A session, and I'm really, really inspired by the presentation and also reach of Glen and Tony with the audience, and as well as the KNOWNpreneurs. And I'm glad that you all feel like, you know, you had some, or most of you felt like you have some questions to ask and more, you know, further researching. Like Dawn said in the chat, a banker is a good friend to have. I like that. Just like you want to have a good attorney, you want to have a good someone in insurance and someone in accounting. So a banker is that fourth friend that you want to have. So with that, the only thing I wanted to add, because you know, just Glen mentioned CEDF. CEDF will be presenting in a couple of weeks. They're going to be presenting some of the programs. It's good to know that Liberty and CEDF work hand in hand together. But you know, in this program, what we try to do is present with at least 3 options: the grant alternative, and then alternative financing sources, as well as banks. So you're going to be able to make a decision, an informed decision on your finances, and that's the goal. So with that, you know, we're wrapping up. So I'll see you next week, I guess. What's up for next week? Do you know, Don, what the menu is?
Now you're putting me on the spot. Frank Dixon is next week from PTAC. So we're going to be talking a little bit about capability statements and how to present yourself as you start to bid for work. So
excellent.
Thank you, everyone.
You so much.
Have a great week.
Thanks, Glen. Thanks, Tony.
Thank you.
Thank you.
Thank
Bye.
you.
It's been a pleasure.
Take care.
Thank you.